Have you been trading and you see where price is pushing hard to the upside or moving to the downside, okay? And what you see are gaps in between the last candle that closed and the most recent candle that closed, meaning price didn't come back to the previous candle that closed, okay? All right? So you have what's called an imbalance there, all right? And you may be scratching your head trying to figure out, well, why did price actually do this, okay? Well, we know who drives the markets, and hopefully you do, the banks and institutions, all right? So they're always constantly trying to fill orders to keep the market rocking and rolling in one direction or the other. Now, we do know that the market can do what? Shift, reverse at any given time. What I have here on my chart is an example, just kind of a diagram we're going to use, and then we're going to move over to the charts. I'm going to show you some examples of what I'm talking about when I'm referring to gaps in the market, okay? All right, we're going to talk about those on a few charts here. I'm going to show you some examples as well. But I want to kind of give you some pointers on how to identify them, because people within the community here, you maybe you're someone that's new to the channel for the first time watching, and you don't know what an imbalance is, okay? So I'm going to show you what it is, all right? But first and foremost, let's talk about what goes on or what happens in between where price closed last and then it pushed higher, say for instance, when it's moving to the upside, and it doesn't come back and close or test the previous candle, okay? Basically what you have is where, like I said earlier, the banks are trying to fill orders, all right? And what happens is that when the market is moving fast enough, they can't get all the orders filled quick enough, all right? All those transactions that they're trying to take place or trying to happen, they cannot fill, you know, a group or a large pool of orders quick enough. So as retail traders, we want to follow in the footsteps of the higher beings, meaning the banks and institutions. They're the ones that push and pull the market, okay? We as retail traders, we do not have the force, the capital to push or pull the market in any given way, all right? So we have to be able to ride on the coattail of the bigger players. So we want to wait for the opportunities for price to pull back to areas where we see those gaps in the market, okay? Because just logical thought process or thinking lets us know, or you should know, oh, okay, if there's an imbalance in this area here, okay, all right, where price is, say for instance, breaking structure to the upside, all right, and we notice where we have a demand zone and we want price to come back to it, and there's a gap there in that area, I talk about this. That increases the probability of a trade moving into our favor. Now, if you haven't watched any of my videos here on the channel, I like to see three things that I always talk about happen, okay, which increase my chances of a trade working out. Number one, a break of structure. Number two, I have to see aggressive buying or selling once price breaks that area of structure, aka meaning we have a demand or supply zone being created. Number three is very important too. I want to be able to always talk about buying the lows and selling the highs. When I'm looking to buy at a key area of demand where there is aggressive buying, I want to buy at a discounted price, okay, where prices are cheaper. And I want to sell at an area of supply where prices are higher or more expensive, okay? All right, so there's three things that I really look for. But in this video here, we're not going to be running down through the strategy of you know, in detail of what I actually or how I actually take my trades. If you're interested in doing so, please watch some of the videos on the channel. If you want to really increase your chances and maybe get a better understanding and want to see some of my live trades where I break down my entries, it's kind of, I'm not gonna say they are instructional based videos, but they are videos that help you understand or will help you understand, you know, my mindset, my mind frame, what I was thinking, meaning the thought process I was going through as I was working my way up prior to taking a trade, as I explained in the videos, as well as once I'm into a trade, you know, what I'm looking to see or what must unfold, okay? So those are the trade breakdowns which are included in the elite membership if you're interested in joining that tier on or through the YouTube program, okay? So all you have to do is click on the membership tab or link on the homepage channel here on Future Trading with Mike. You'll find that membership tab somewhere near or link near the subscribe button. Click on that and there are two tiers there. The elite membership gives you the trade breakdowns, the video playlist of videos that are packed with valuable content, ones that I've hand selected out of a group of 500 videos that I think will really help or aid fellow traders. Maybe you're a beginner trader or someone that's looking to understand more about supply and demand. So those videos should kind of point you in the right direction and provide you some great content or valuable information to aid you in your own trading. As well as what I'm gonna do going forward, it won't be on a daily basis, but I'm gonna start maybe a few days a week doing a market analysis, kind of giving my rundown of what I see unfolding in the market prior to the session, or the New York session that is opening, as well as pinpointing or giving you some freebies to the zones that I'm looking to trade, okay? Meaning the areas of interest that I'm looking to trade. So if you're interested in, collecting or gathering that information and really grasping and understanding of how I trade, I highly recommend you become part of the Elite membership or join the Elite membership. You may be asking, how much is it? It's $6.99 a month, okay? And it's not something that's like a course that I'm actually charging for, because look, I'm giving away lots of valuable information for free. And maybe saying, well, why are you charging $6.99? The $6.99 is basically, look, I've spent so much time providing invaluable information and content, and it takes a lot of time and it takes a lot out of me when I have a lot of other things going on in my day-to-day life. So to me, it's for $6.99 a month, and we're talking about, yes, a month. The price of a cup of coffee, what most people pay a day, we're talking about $6.99 a month, and you're getting all that information, all right? While most people probably are charging hundreds to thousands of dollars for a trading course that may never pay off for you, okay? So it's like you weigh the options, $6.99 to see how much information you can gather and see if it's going to help you in your own trading, especially if you're a beginner or a new trader, or go to someone and pay hundreds or thousands of dollars for a course, whatever the case is. When I'm providing pretty much so much valuable content through a tier that YouTube offers, okay? It's just a way for you to support the content that I'm creating here in the channel. That's what it really draws down to. It's just, kind of just aiding me along and thanking me as a content creator for making these powerful videos, making this content available, this information that really will help you out, And I want to thank everyone who's currently joined, okay, enrolled or signed on to the Elite, becoming an Elite member. Thank you. We have so many people here in the community that have already done so, and I'm receiving such a great amount of feedback. Meaning, when I say feedback, I mean positive comments, both here on the channel and over on the Discord as well, for thanking me for providing or making such great content that it's helped them in their own trading to where they actually turn their trading around. And if you don't believe me, go to the Discord community. You'll see so much positivity going over there, people thanking me for what I'm providing or the efforts I'm putting forward and putting forth in trying to provide content that helps people along. I mean, as I always say, at the end of the day, I'm all about, and I believe in, if you know something and you carry valuable information that may help others, why not help others? And basically give it away for free, because at the end of the day, I can't take it with me if I was to leave this beautiful earth of ours and move on. And, I would prefer to really help someone out, leave something behind that allows somebody else to succeed, okay? So thank you for doing so, everyone who's currently subscribed as an Elite member. And if you would like to do so, again, find the membership tab on the homepage here on the YouTube channel, okay? And click on that and you'll see the tier Elite membership. All right, so I just wanted to interject that there, because people always ask me how they can sign up for the Elite membership, become part of it. So you pick and choose if you'd like to do so or not. But getting back to the topic at hand here about the gaps that we see unfolding in the market, this is a diagram here, all right? And in this diagram, I'm going to show you, break a structure, how the process actually works, what we see unfolding, and, just kind of key areas of demand or supply, okay? And then within these boxes that you see here, we're going to talk about, this would be areas where we would hope to see an imbalance resting in, okay? So let's look at this diagram. I showed this kind of once before, a similar version of this. And basically, when the market, say for instance, is moving to the upside, we see price making higher highs and higher lows, right? Okay? And when prices moving higher, and then it pulls back, and then it breaks higher, meaning taking out the previous high. All right, because that's one thing I like to always see when I'm looking for an opportunity to take a trade. Is price making a new high or taking out a high or breaking through and making a new low? In this case here, we see price making a new high, taking this area out here, okay? So that's what we call a BOS, a break of structure to the upside, all right? It makes a new high, pulls back, breaks higher, taking out a new high here. Another break of structure. So when we have every little ellipse, or if you want to call them circles, whatever the case is, these blue circles, those are areas where we have a break of structure. Now I put one right here just to notate the fact is that this is the actual high, okay, before price started moving lower. But these are the areas that break of structures here with the circles and the arrows moving through the circles, okay? Now, if price, say for instance, was to break this high right here, we have a break of structure, okay? Now, I would be looking for price to do what? To pull back to an area within the swing, preferably the lower portion of the area where price, before price broke structure, to see if there is a level or a what I classify as a demand zone there, to where I can look for rejection to take price what? Higher, okay? To make a new high, or at least to take it back up to the tops where the high is currently at, okay? So let's say price broke structure here, pulls back to this key zone right here, okay? And we have a demand zone, which I just marked as this box right here, all right? So I'll be looking forward to see if there is a demand zone here after the break of structure, all right? And if there is, I'm looking to see if there's an imbalance, an area where price did not, like I told you, once price broke higher quick enough, the last candle, the last candle that broke above the most recent candle in a sense, where price didn't come back to that candle, okay? I'm going to show you that on the charts themselves so you can really see it when I'm talking about the actual candles, okay? But just for all purposes sake here, take a look. Break of structure, if price pulled back to this area of demand, and then we had an imbalance like I talk here. So let's just use this as an example here, okay? While we have it here on the chart, or this diagram. Let's say price came back. So I'm going to take an arrow here right quick. Came back right here, okay? Boom, it did exactly that. Broke the structure, pull back. This is the demand zone right here. Don't have it quite tapped in there. Cancel. This is the demand zone right here. It taps into the demand zone, okay? Now, let's say the top end of this box here was a line. Let's say it was a candle there. And then the next candle that broke above that previous candle was right here. We'll mark that with that arrow right there. Let's imagine that was the gap between the two candles right there. You see how there's a gap? Once price moved higher here, as it created this area of demand right here. Now, being that we have that demand area with a gap, okay, or imbalance, whatever you want to call it, at that point there, that increases my chance of having a higher probability setup. So we have, what I look for then is rejection right here. And if we get rejection, my aim on my target is going to want to take price back up to this high right here, where there is also liquidity at, and look for it to take that area out. So that's what we're looking for. Break of structure, aggressive area buying, which is the demand zone where there's a gap at. And I'm going to show you, like I said, an example where we can actually see the candles, there's a gap between those candles there, okay, back at the zone, okay? So, but sometimes price, what it'll do is it will push higher, break structure, and not pull back to that area, okay, or to that demand zone. It may do this right here. Breaks higher, break structure right there, okay? So let's take this away here, this line here. Pull back. It may just come back here, which I like to classify this as the break. Well, this will be a break and retest where price is pulling back to this area of support right here, not really tapping into any demand zone, okay? So this is just a break and then a retest, okay? So that does happen sometimes, where price pulls right back to support. Those that trade support or resistance, price pulls back, and you maybe look for an opportunity to go long. Now, I trade only supply and demand. That's my cornerstone to the way I actually trade, all right? Because to me, you're getting in at better price points or levels, and being able to profit more or capitalize on more when price rejects the area. So price may do that. It may come back here, tap into support, and boom, push higher, and then we get another break of structure right here, okay, to the upside, all right, the BOS. Now, what may happen here is that price may do this here, break the structure, and then it may collapse and pull back down, start making lower lows and lower highs, and want to test this area of demand now. Why? Because we may have an area of liquidity resting right here out of this swing where price broke structure to the upside. So it may say, hey, I want to take this money here, the market, the banks, institutions, take this money, stop traders out, because you got to believe this. This is their goal. When I say they, the banks, institutions, their goal is to, one, run stops, okay, and take money at the same time. So they want to take the money here, the pot of gold, the bag of cash, collect money here, all right, where's liquidity resting at, and then they may bring price back down here to where there's an imbalance with a lot of volume that came out of here after this break of structure to the upside, and you had this nice demand zone sitting right here. So price comes back to it and does what? After taking liquidity right here, comes back to it, rejects. So where do we look to take the trade to? Back up to the most recent high where there's liquidity resting at, okay? Because we had a low here, okay, followed by a lower high that broke price lower. It broke. Now we have price breaking through an area of structure. So that's why I marked the bottom end of the swing right here as a BOS, because it broke structure back to the move on the move to the downside before it tapped back in, after it tapped back. Well, I should say it broke it here and then came down and tapped back into this demand zone right here. So it took liquidity, broke structure, okay, stopped traders out, and just moved price a little lower to tap into this demand zone here. You will see that lots of times. So pay close attention where you see the market moving to the upside, okay, and making or creating or breaking structure in several different areas, or if it's doing it to the downside. Look to see if you have, multiple breaks of structure to the upside, and then as prices fold into the downside here, where you say you can see, okay, maybe price is going to take out this area of liquidity, run some stops here as well, just to break lower and reject on the next area beneath this area here, reject here at this area of demand, and then boom, it does that and then breaks higher. Now it stops up here. Why? If price rejects here, you're going to want to take it back up to here, because this right here is now going to be a key area of supply. So we can take the trade, what I'm trying to say, from an area of demand back up to an area of supply. That's typically, I'm going to tell you guys, I'm going to give you a little hint here. That's the type of setups that I would really like to see. I like to see areas, especially, which even increases my chances for a higher probability setup, to where I see price tap into a demand zone, aggressive buying, an imbalance after we have a break of structure right here. So the break of structure is the first thing, okay? But now we have that demand area, okay, where there's a gap at, okay? That tells me the banks have not, more than likely, filled all their orders. The price was just moved too quick enough, because they were filling orders so fast that the price just took off to the moon, okay? So when price comes back here, and I see on the way down, price had this break of structure where it took out this area, man, it comes down to demand, and now we have supply sitting up here. So basically what I'm trying to say is, if you could look for areas where price has created both supply and demand, like this move to the downside here, it created an area of supply, all right, and tap into an area of demand, rejects the area of demand, I'm looking to take price where? Back up to an area of supply, all right? Beautiful trade setup right there when you see things like that unfolding in the market, okay? Or it could be you're at supply and you see demand below and you're looking to take price, moving back down to a key area of demand. So when you see price is able to alternate or move from a demand zone to a supply zone, or supply zone to a demand zone, and you see that within the market, yeah, those to me are great opportunities right there, okay? But then price taps into it, that back to supply zone. What does it do? It rejects, okay? It rejects, all right? And then it pushes lower, all right? And then it breaks higher. It makes a higher low right here, and then it breaks higher. So that's just an example of what I want to show you how this actually works. But now let's go to the chart here, because I want to pinpoint to you and show you the actual area so you can identify and lay your eyes on what a gap actually is, all right? Or maybe you want to call it an imbalance. So let's take a look at that. All right, so what we see here is a break of structure to the downside, okay? Meaning there was a low here, price formed some structure as it was moving higher, okay? And then it broke below this low, taking this area out right here, okay? Liquidity was taken right here, okay? So now we have to say to ourselves and pinpoint what are some key areas that where price could actually retrace back to. So we're looking for a supply zone, say for instance, right? And this is an example of a supply where price retraces or pull back to an area where there's a gap at as well, okay? So we got the breaking structure at the price broke below this area right here, okay? Moves lower, breaks lower, meaning I want to see a full body candle close below here, this low, okay? Boom, we get it right here. This candle right here, this red candle. And it continues moving lower. Now, we wanted to mark or identify an area where price could actually pull back to where there's an imbalance at, okay, at a supply area. Now, supply, again, is aggressive selling. Here is a level to the downside, okay, that aided in the break of structure right here at 4105.5, okay? So, I marked that zone right there. Price retraces back to it. Now, we're talking about the gaps, right? So, let me show you the gap, okay, at this area of supply right here. I'm just going to use the arrow line here. All right, you see the last up candle, the last green candle to the upside right here, okay? Now, the next candle, meaning we're looking for a candle that closes below, okay, with a full body close to the downside, all right, which will be a red candle. It's this candle right here. This red candle took out that green candle right there, okay? So, there is a difference or in between or space in between this last up candle and the red candle that took it out. So, the bottom end of the candle, let me move this purple line right quick so you can see it. Let's blow it up a little more. Let's get the arrow line. So, the bottom end, including the wick of the candle, is right here. Okay, the last up candle. The next candle that closes to the downside, meaning closes below that last up candle, is this candle here. Okay, that's the candle that took out that green candle. So, once it closes to the downside, does it immediately come back and fill that area in between the bottom end of that green candle and the bottom end of this, excuse me, yeah, or if you want to say, yeah, the bottom end, okay, right here, of this red candle right here. So we'll mark that, okay? All right, look, when this last red candle, or this candle here closed below that green candle there, did a candle push back up to close the gap, to fill the gap there? No, it did not, okay? So we have a gap in between this area here, meaning that when we saw price, okay, let's squeeze it back together, breaking lower, pulling back, boom, close to the downside, taking out this low right here, we automatically have a supply zone set up right here with a gap right here, okay? That tells us all that aggressive selling that took place by the institutions or banks, they were quickly filling orders but could not get them all filled. So, based on probability and this logical thinking, what could happen when price gets back to this area? They have orders on the books that they have to fill. So when price gets back to that area right there, more than likely they're going to try to fill the rest of those orders, and the market's going to do what? Fold back to the downside. Look what happens. Price pulls back to that area, to this area supply, where the imbalance rests. Now that it's filled the imbalance area, now that they probably have filled and transacted the rest of their orders, what's going to happen? They're looking to sell the market. The market's going to continue pushing lower. To do what, and where is our aim? What are we focusing on as far as targets for profit? Okay, the low right here. Why? Because now this is the most recent low, and there's liquidity resting right there. And if you look at its price retrace, I always talk about following price action back up to an area or back to a zone. We look to see what happened as price retraced back to the area there. Okay, clean slate. Price just boom came back to the area. Okay, and then rejected. And we're aiming for our target to be break below 4,076. So you may be asking, well, where do I get in the trade at? Once you get into a zone to where there, in this case here, is an area of supply where there's an imbalance, I'm looking for rejection. What does rejection mean to me? A break of a candle in the opposite direction. Right here, as price breaks below this last green candle to the upside that brought price, okay, or retrace price back to the zone. This candle here was the red candle that took out that last up candle right there. At that point, I'm short. At 41.07, I'm short, okay? Now, price, if you get at 41.07, price comes down to 4,098, okay? So you picked up 7 points, maybe 7.5 points right there, okay? Price pulls back somewhere around, breaks, comes back and it pulls back above your break, your break even or your entry point, right? But don't be scared because that's what they like to do. You have to be confident and stay in the trade, all right? To me, as long as price does not break above the back end of this area right here of 41.18 where you can put your stop at, or above or back at the back end of the supply zone, you're still safe, okay? All right, so you have to give price a little room to breathe, okay? Now, this is on the 24 range chart, all right? And typically what I would do is once I mark off a supply or demand zone off of a higher time frame chart. Now, this is not my highest time frame chart, but being that it's a 24 range chart, I'll scale down to a lower time frame and look for a supply setup, say for instance, or rejection off of a lower time frame, like my 12 range chart, which is primarily my entry chart, okay? Now, again, get in at 4107. I'm aiming for this area right here, back at the low at 76, and let's just say 76, okay? So imagine yourself getting into a trade like this, okay? And I talked about this yesterday in the video and on Discord, to where I said I had marked this up yesterday, the evening before last, okay? And I was looking at this zone here because I wanted to get into a trade, but it happened at 2 o'clock in the morning and I'm not up. But I definitely would have traded once price tapped into this area. Had I been up and this had been a normal trading time for me, I would have got in here and taken price all the way back down here. Now, I did get into the trade, but it didn't happen into the session once the session opened up yesterday morning. So I saw that we had this area down here that the price was probably going to focus on once it rejected this zone. Now, I got into the trade at 4,100 when price broke lower, pulled back. I was looking and saying, how can I get into this trade to continue taking price back down to 4,076? Well, when price pulled back to 4,100 being a round number, I looked for rejection there on my lower time frame chart, and I executed that trade to go short. And I posted that here on our Discord community. So if you're interested in joining our Discord, find the link down in the description portion of this video. Click on it and invite yourself in free of charge. Yes, it is free of charge. We come together as traders and we post our, our levels and zones, and we also post, screenshots of our trades. And I post my trades on there. So whenever I take a trade, I'll either take a screenshot like most traders do, and I'll post it out there. Okay, so my trades are sitting out there on Discord as well. Okay, but anyways, I got into that trade at 4,100, take it back down here. But that's what I want to show you about this. That's what this video is about, is really being able to identify the gaps or imbalance in the market. Okay, so just to kind of show you, let's see, I'll move this line right here. But anyways, you see it there. Okay, so let me go ahead and take that off. All right, because that was a supply zone. And let's see, I'm just going to show you an example. All right, so I'm going to show you just a quick example of a demand zone where there's a gap at. Okay, so we have price moving to the upside here, making the higher highs and higher lows, pulls back, retraces pretty deep before breaking higher here. So we got a breaker structure once price broke above 41.88 3/4 right here, okay? So it took that area out. All right, so once it breaks or creates a breaker structure, I'm immediately looking for a demand zone, okay? An area where there's aggressive buying at, all right? Now, that could be at this area right here, okay? And price comes back, taps into it. It does reject a little bit, but we don't get that candle close to the upside here, okay? Which gives me, or lets me know there's rejection. So I don't get it, and price just keeps pushing lower, all right? All right, and then we have, basically fair value gaps, if you want to call it that, or additional areas where there are gaps at the market. But I'm looking for a gap or imbalance back at a demand zone, okay? An area was aggressive buying. So as price pushed higher here, pulled back and broke higher, we have aggressive buying in this area right here, okay? Coming out of this swing to the upside. All right, so this swing to the upside, 80 in the break of structure right here. So I'm marking this area right here, okay? This area right here is a demand zone, okay? Now, price taps into that demand zone. There's a small gap, okay? At the top end, let's mark it right quick. The top end, you see this candle here, this green candle right here that broke that last red candle right here to the downside, coming out of this little swing right here. So the top end, let's move this box out, which I marked as a demand zone. So right here, okay, that green candle took out the top end of that red candle right there. All right, did this next candle that broke above come back and fill to this line here? Just as it broke above here, all right, it didn't come back. So we have, let me show you, very small gap right here, maybe a tick or two, okay? Right there. This candle that broke this red candle, last red candle to the downside right here before it broke higher, the top end of it, that candle there broke above, this candle here, the wick came back down here, we got a small little gap right here. That's an imbalance. So we have an imbalance back at this area of demand marked right here. Okay, so it comes back, fills that little gap there. We tap into the imbalance. I mean, we tap into the demand zone there, but we got a swing here. It taps in here, and what we're doing is we want to see price that candle break to the in the opposite direction to the upside. Okay, so I need to see this green candle take out a red candle, a last down candle. Okay, so it pushes down, pulls back, and breaks lower, creating a swing, right? So now I have to say to myself, I don't want to just take the, I don't want to, let's see. I'm looking for, basically rejection here. Now, I always say we look for that, like I said, a candle in the opposite direction to break above. Well, right here, I could take the trade right at the close of 57 1/4. We have the swing here, but I'm okay here because this swing primarily didn't take out anything as it moved and pushed a little lower. All it did was tap a little lower into the area of demand. Once I get the breakup candle to the upside of 57 1/4, I'm going long. Now, remember what I said a little earlier. Do you see anything that stands out? I'm going to ask you that, okay? Anything that stands out here, okay? To me, yes, we have an area of supply sitting up here, okay? Up here with a imbalance as well. So to me, once I get rejection here at demand zone, where there was an imbalance at as well, I'm looking for price to get the break here at, well, you probably not gonna get to the trade until about right here at 60.5. Me being an aggressive trader, once I see price start to break above this last down red candle at 57 1/4, I'm probably already in the market in the trade. But if you're someone that's new, be more and you're more conservative with your trading style, wait for the break here at 60.5 or whatever the case is to get into the trade. And aim for an area of supply above, because there is supply right here, okay? So if you get in here at 60.5, you can take this trade all the way back up to 74.5, okay? And that's 14 points. 14-point move right there, okay? Beautiful and sweet trade setup, all right? So look for things like that to unfold in your own trading. So now I've showed you how to, what the gaps or imbalances look like back at the key zones. Supply and demand. I want to see them at one of those, areas, okay? To me, all right? Because it increases my chances or probability of a trade working out in my favor. Practice it. Go back test and forward test it as well. So I just wanted to kind of give you some pointers that may help you out in your own trading. But that's all I have for you guys in today's video. Yes, I did kind of overdo it. Yes, it took a little bit longer, and I was kind of beating the horse to death here in this video a little more because I am trying to stress, guys. That's the purpose of why I do things and kind of reiterate things over and over, because I want to really hit home with a lot of people. I want to drive it home so people can really see this, because for me, I have to see things, review them before it really sometimes kind of settles in. I may not catch it the first time around. We all have different learning curves or paces, but trading, I'm telling you, it is very difficult. It's one of the hardest things you could ever grasp or understand, because nothing's 100%, but we do increase our odds of favorability or probability as well. I should say favorability when it comes to trading by looking for lots of confirmation and confluence, okay? And that being when I see things like this, when we're talking about gaps or imbalances coupled with supply and demand zones, things of that nature, that's what works out in my favor, okay? But that's all I have for you guys today. I appreciate it. If you do me a favor, drop a like on the video. Please do so, okay, guys? It helps helps me as a content creator. It helps the algorithm out. It helps get the content out there to other individuals that are looking for the similar type of content to help them or aid them in their own trading as well. If you're a first-time viewer, please take the time to go ahead and click on that red subscribe button. Click on the bell next to it. And one other thing, please turn your post notifications on so you never miss one of the uploads here on the channel. I'm out. I'm getting over to the Discord and start doing some personal trading of my own. Thank you, and we're in the weekend now, so have a great weekend.